What's up guys, it's Alex, and today we're going to recap this Netflix trade. Now guys, if you're new to the channel, we posted this thing yesterday, okay, and anybody could have taken this trade, and it seems like we had a lot of people come out successful today, so I'm extremely happy about that. Now, to the people who maybe didn't get their order filled, to the people who missed out today, let's go over some key points and exactly how you could have identified your entry and your exit, and then go over some other things that are going to help you in the future, okay? So everybody wants to know, what's the next trade, Alex? Give us the next play. Okay, but how do you expect to get into the next trade if you haven't learned from your mistakes on this trade? Okay, so that's exactly what we're going to do, is review the key mistakes one could have made on this Netflix trade today. Okay, so it's very important. Okay, it's not the sexiest topic to review trades. Like I said, everyone wants to know what's the next trade, but you can't improve as a trader if you're not reviewing the trades you already took. Okay, so the first important point we should point out here, okay, is how could you have targeted your entry? Okay, so when you're looking at the chart, I know a lot of people have these, goals or these plans for the stock to reach 510, 515 before they short, right? Okay, and I like that. It's a good plan, and I like when people can stick to that, okay? Because it takes a disciplined trader to stick to a trading plan. But you have to understand, okay, when you're setting these targets, okay, or 508, 511, what is that based off of? Okay, check this out, guys. Was there any pre-market level that indicated that 508 or 511 would be a good short? There wasn't. Okay, so you have to understand that if you're going to short the bounce, you need some reasoning for your entry target. Okay, so here, let me show you how you could have identified a good entry here today. So the first thing I want to point out is the volume characteristics. You see, we open up here, significant spike down. You might be thinking, oh shit, I missed the trade. That sucks. Okay, but luckily, the thing still bounces up like we called. Okay, and then what happens? On the way up, it's on much lower volume in relation to when we were dropping. Okay, so you'll see as we move up here, okay, the stock volume dwindles. Okay, on top of that, you get the weak wicks at the top. Now, a lot of beginner traders will make the mistake, right? They see the wicks, okay, and they think, oh my god, I need to get in. All right, but that's not always the case, okay, because if these wicks were forming but on strong volume, that doesn't mean that the stock price isn't going to go higher here. Okay, so a lot of people want to enter in just as soon as they see these wicks, okay, but that's not always the case. In this case, though, it did work out. Next important thing we gotta point out when it comes to targeting this entry is actually the moving average. Now, guys, we're not a big fan of the moving average, because look at this, guys. I mean, it can crash through it at any point here, okay? So just because it's a moving average doesn't mean it's going to be any great resistance or support, but in this case today, it was. And you have to think, why would it be a great resistance today? Well, obviously, if we're gapping down on very strong volume, we have a very negative outlook for the stock, and the statistical data that we've analyzed and pointed out towards in our last video says we should be dropping lower. So that is what gives this moving average more significance. Now, you'll notice here we get that tap off the moving average at 506. Okay, so that's what would have been a greater entry target for you. Okay, so when you look at this, it's not obvious here because the moving averages are different, like on every chart frame. Okay, so you want to be looking at the daily chart, because this is going to have a lot more significance than a 5-day, 5-minute chart. Now, watch. If we switch it to 1 day, 1 minute, okay, the moving average is going to be different there. Okay, so it's all over the place. Okay, but the most consistent one is going to be on that 1 day, 1 minute chart if you're looking for a trade to hold throughout the day. Okay, if you're if you're a day trader and you're trying to get a quick scalp, okay, maybe it'll be good for you. Maybe it'll work for a little, but it's not the bigger picture here if you're looking at it on these smaller time frames. Okay, so that's another important thing. Look at a larger time frame if you're going to use that moving average. Next point, which is arguably the most important point, and I can't stress this enough. The third point, guys, is DTR, daily trading range. Now, guys, you won't find anybody else calculating this for these earnings plays. Okay, so if you want that DTR, that magical DTR, you better be coming back to my videos to find it. Okay, so what is DTR? In case I haven't nailed it into your head by now, which, by the way, I will keep nailing it into your guys' heads until you get it. Okay, and literally every earnings video, I will nail this into your head. Okay, because once you can understand the DTR, guys, you're going to notice you're going to be way more confident with your entries and exits. So daily trading range is what I calculated in the last video. Now, I pointed out that the daily trading range average on Netflix is 32 points with the pre-market move as well post earnings. Okay, so that means the 1 day post Netflix earnings, on average, this thing has a daily trading range of 32. So from the top to the bottom, guys, that's the daily trading range for the day. Okay, so from the top of yesterday, after these earnings are announced, 525 down to 488 today. Okay, so that's what, 37 points? Let me do the math, guys. I suck at math. All right, 37 points. Okay, so when you know the daily trading range is 32, you shouldn't expect it to go much past 32 for the day, because that's the average based on the last 3 years that I gathered. Okay, so that works very well. So you'll notice here, if you understood the daily trading range, okay, as it's moved 32 points away from the top yesterday, this 32-point move coincides very well with a great exit. Okay, so as you reach that average, you know you might want to start selling some positions. Okay, and then obviously if you're swinging and you want to hold these a little longer, you could do that too. Okay, but by approaching that average, you know, okay, that it's just probably not much more room lower. Okay, so and you'll see that, you know, it's very accurate. Okay, we only move what, 4-5 points past what I calculated. All right, so if you're not watching the videos and not paying attention to the DTR that I actually mention in them, then you're missing out a lot, because that's what's going to help you be accurate. Now guys, who else is this accurate? Okay, nobody's giving you these specific numbers. Okay, you can go watch Ricky Gutierrez or anybody, and they're always going to say, guys, today we held above the moving average. Guys, I don't know what's going to happen. Guys, today we might drop. Guys, I'm giving you the highest probability outcomes, and I'm saying this is what's most likely to happen. Now, of course, if we calculate an 88% probability to win, okay, then that's a pretty damn good probability. And if you lose, you lose, okay? But when you trade with probability and you win more often than you lose, then that's how you become a profitable trader over a long period of time. Now, you know, that's no diss on anyone else's style of trading, right? So like Ricky Gutierrez or somebody else, they have their own style of trading. They're profitable. Great. Good for them, okay? But I'm trying to be more specific here, okay? And that's exactly what I do. Like I said, I don't need to be the specific. It can backfire on me hugely, okay? It's a lot more easy to be you know, a clueless guy who sits on the screen and says, guys, today we're above the moving average. But I calculate these things, and you need to use it to your advantage, okay? Because nobody else is going to be giving you these averages, you know, based on the last 3 years for Netflix earnings. Okay, so those are the 3 most important things about this Netflix trade. Okay, and now I know you're excited to get into the next trade we've got planned, which, by the way, guys, I have some trades planned, but I have not statistically backed them. Okay, it's more off of my own experience, and I've understood and realized that we have a lot of beginner traders here on the channel, and I don't want to mislead anybody into any bad trades, because a beginner trader might not be able to notice an A quality setup to a B quality setup, when to get out or when to get in. Okay, and when I can't help you with these things, then I don't want to give you guys any trades right now. Okay, so you'll see here, the reason I give you the Netflix trade is because I statistically back it, okay, and I tell you specifically what is most likely to happen, okay, so that's why I don't want to give you guys any trades today, because I haven't got any stats on them. All right, so like I said, you'll see a lot of traders, they want to trade on hope. Actually, let's point that out right here. Like, guys, you'll see a guy says, today Netflix drops, but the earnings weren't that bad, so I feel like the stock is bullish. Guys, it doesn't matter how you feel. It matters what the data says and what this thing has done in previous years. Okay, so if you like that statistical approach that's going to win you more times than you lose, then this is absolutely the channel for you. So guys, if you haven't dropped a like on the video yet, if you're not subscribed yet, make sure you do that, guys. I'm Alex, the Day Trading Champ, and I will see you guys on the next video.